LiteFinance, the world of financial freedom.
Good morning, it's Monday, April 11th. We are opening the week in the markets. In today's episode, of course, we will talk about what we need to pay attention to when trading next week, i.e. we will discuss world events that affect valuations along with macroeconomic calendar, data releases, and some interesting statistics. Finally, of course, we will check the price chart and try to discuss several scenarios for trading with a given asset. Okay, now let's start by discussing where we are in terms of economic development, business sentiment, and etc. In terms of economic development, if we look at the global PMI data prepared for JP Morgan by S&P Global, the analytic agency, we can see that we are still stably above 50 points, which means the limits of the development or contraction of the economy. We have to add that PMI is a leading indicator, so in a way it shows us the business outlook. Here we also have a chart broken down by economies of developed countries. So, another issue is the yield curve, i.e. the difference in value between 10-year bonds and 2-year bonds. In other words, a graph showing whether it is profitable for banks to borrow money or not. Gray fields are periods of economic crisis. So we can see that at times when the line crossed the break-even point, that is, went down into the territory of negative values, then there was a crisis. At the moment, we have not crossed this territory yet. And the second issue is that the 10 yield curve minus a 3-month bond is a better measure. And here it is clearly visible that there is no question that banks would not be profitable to borrow money. So, moving on, the most important for us this week will be the US inflation data, which is expected to rise from 7.9% to 8.5% on a yearly basis, the consensus says. It will probably increase a bit because despite the fall in oil price, only wholesale prices for companies, not at gas stations for consumers, have fallen, which is also strange and depend on a few other things. You can see it in this chart. The orange line shows the wholesale price, and the green one shows the price at gas stations, where wholesale prices can be seen to decline as consumer prices continue to rise. Another issue is the interest rate hikes on Wednesday by the Central Bank of Canada and New Zealand. According to the analysis of the Reuters agency, the analysts' consensus says that there will be increases in both cases above 50 basis points. So you can see that they are continuing their strange policy. I have already talked about the impact of interest rates on the suppression of inflation on this channel, maybe not hundreds, but dozens of times. So far, the ECB, which also decides on interest rates on Thursday, is holding it back, and so far everything indicates that it will not be any different at this time. It is also worth mentioning the publication of reports from OPEC and International Energy Agency on the levels of oil production and the release of the announced stocks to the market. So finally, of course, the issue of the war in Ukraine may also have an impact on valuations. So far, we have information that the Russian army has withdrawn from Kiev and are moving east to Donbass to support the offensive there. Putin has changed the commander of the entire operation, and everything seems to be changing tactics. We can learn from the published information that the offensive could start any day in that area, so any significant developments could create a bit of a butterfly effect, especially if any positive news would arrive. So, well, I think it's time for the charts. So today, let's talk about oil. And still, I must say that the price didn't go according to the previous week's scenario, but I am still in the game. I told last week if the level at the 78.6 FIBO measurement won't work out, I will try again at 88.6. And so I did. I have a stop loss level at 96 US dollars, and when it break out of the psychological level of 100 USD and hit stop loss level, I will have to change the approach. So next is Euro-CAD. I choose this pair because Eurozone is lacking commodities and raw materials, which signals potential threat to the economy. And this weakness is visible against currencies whose economies are heavily based on raw materials export, like Canada or Australia. So Euro-CAD, we can see, is trying to fight with this resistance, but I think the downtrend will continue, and so I would like to see the retest of the blue line, which is our resistance level, and continuation at least towards this zone where we have a cluster of FIBO measurements. So next we have Euro AUD, the same situation where we measure everything with FIBO, and then we can see a possible target zone at 1.4100 and 1.4160. So, okay, that would be all from my side. Thank you for watching, and till next time.